right, aloha, and welcome to another Aloha Friday episode here on the Multifamily Mindset podcast. My name is Tyler Deveraux, and today we have Axel Ragnarsson, man, out of Boston. I'm pumped for y'all to hear his story. I'll give you a quick little intro. Okay, Axel is, well, like I just said, is an active real estate investor in Boston, one of my favorite cities in the nation. I freaking love that place. Hate the sports teams, but love the place. He purchased purchased his first multifamily property his sophomore year in college, which I can't wait to dive into that. That's super impressive to me. And then that led to the creation of his investment firm, which is Aligned Real Estate Partners. He currently has a portfolio of somewhere around 450 units and also is the host of the Multifamily Wealth podcast. It's one of the highest rated multifamily podcasts in the space. So if you do not subscribe or listen to that yet, you need to step number one, first actionable of the day is to check that out. So Axel, bro, welcome to the Multifamily Mindset podcast, man. We're excited to have you here.
I appreciate the invite, man. I'm looking forward to our chat.
Yeah, man. Hey, do you know who Bob Menery is?
I do. Yeah, he's a Boston guy through and through. He's a riot, man. I love his stuff.
Yeah, but you also have, so I love his stuff. And it's not just the Boston accent, okay? I don't want to get this very clear, but there's these little things that you say. We were talking off camera, and immediately I was like, dude, this dude sounds like Menery. And immediately I was like, you know what? I wasn't sure if I liked him out the gates, but Menery's a beast, dude. I freaking love that guy.
He is so funny, man. I don't know. There's a bit of a New England thing. I think whether you're from, Boston or just that whole area, I agree with you. There's kind of like an edge or some, it's easy to tell when somebody else is from that area for sure.
Yeah, there's not a little thing, bro. You guys have a big old accent. I love it. So, bro, let's dive into something. First off, actually, are you a Celtics fan?
Yeah. Unfortunately, right now I am a Celtics fan. As we're chatting about this, they're getting pummeled by the Heat in the Eastern Conference Finals. Yes, I am a lifelong Celtics fan, and I'm going through some pain right now, so it's a little fresh.
Down 3-1. This will actually air on Friday, believe it or not.
Okay.
So down 3-1. They play tomorrow. Can they push it to Game 6?
Yeah, I know this isn't a Celtics podcast. I could go down a whole road of how bad they are at home in the playoffs and why that makes literally no sense at all. It could be a frustrating podcast for me, but I think they force a Game 6. I don't think they win the series. I think they go back to Miami and lose, but I think they got another game in them. I'm trying to temper my expectations. I'm not trying to get caught up in everything that's going on, even though they looked good. They looked good last night.
Good, dude. I love it. Okay, let's dive in, bro. Let's just dive in quick, high level of your background. Like, what I would love to know is what needed to happen to put you in a position to buy your first multifamily property in, your sophomore year of college. I love that.
Yeah, for sure. So, high level backstory. So I grew up in Southern New Hampshire, about an hour north of Boston. I grew up in the Northeast, and went to college out in New Hampshire, Seacoast in New Hampshire, out at UNH. And I've always, had a little bit of a entrepreneurial, I guess, drive or edge. I never really had a job. I was always like buying and selling stuff, trying to make money in any way that wasn't clocking into a job. And late high school, early college, I ran a little business where I would buy and sell cars. So I was flipping cars that I found online, and, good money at that time, right? Good money for 18, 19, 20, 21, in terms of when I was doing that, making, a good couple 5 figures over the summer. And, at that time I was thinking, all right, well, when I'm out of school, what am I going to do? Because I don't really want to get a job. I feel like I can make more money on my own. I feel like I got more potential there. But I knew that, buying and selling mid 2000s Honda Civics was probably not going to be the end all be all for my life. So I remember thinking at the time, what do like wealthy people buy and sell? And I think I literally might have Googled that and probably got served up an Instagram ad or something as a result. And, started learning about flipping houses and wholesaling, found that accidentally, really. And as I was learning about flipping houses and trying to figure out, how to do that, I came across multifamily real estate and rental real estate, started listening to the Bigger Pockets podcast and got turned on to all these, multifamily focused podcasts, introduced the whole idea of passive income. And after a while, I stopped trying to figure out how to flip houses. And I was like, I want to go do that because that sounds like a much better deal. You go and buy a good deal, you get your money out if you buy it right. And, the residents there, the tenants there, they pay you in perpetuity. That sounds like a pretty good deal. So Started figuring out how can I go buy a small multifamily property, but I wasn't credit worthy, didn't really have enough money to put down on any meaningful size deal. So then the problem became, let's go find some private money lenders, or let's find someone to lend me the money. And I was blessed at the time to have an internship with a really well-known, angel investment group in Southern New Hampshire. And my job was like, I just took notes during the meetings, and I was kind of like the administrative assistant for this thing back in college. So I'd go in there, entrepreneurs would, pitch to this group of, 5-10 guys and gals. They would invest in some startup companies, and I just sat there and took notes. And through that, I connected with a guy who did some private money lending for real estate, and basically just built a relationship with him and said, hey, if I find something that, looks like this and has this kind of business plan and this kind of risk profile, would you be interested in lending me the money? And he was like, yeah, I'm down to do it if you find something. So I found a 3-unit deal on Craigslist in my hometown. It was a for sale by owner, bought it at the right price, used him as the private money lender, put about 10% down, and, really off to the races from there. And to make a long story short, that snowball just kept growing and growing over the next few years. And I became maniacal about finding great off-market deals that I could go add value to and then pull my money out. And then one thing leads to another, and we get to where we are now, where over the last few years, we just do it at a larger scale, and we bring in investors to help us fund those bigger projects. But the fundamentals have remained the same in terms of the core strategy, which is find killer deals, put them together with other people's money, which used to just primarily be private money lending, but now it's, a combination of debt and raising capital and raising equity, and offer great returns to the folks that participate in what we got going on. And, some other fun stuff has happened along the way, but that's really the high level story.
I love it, bro. Were your friends, so you're trying to search for properties and buy apartment buildings in college. Were your friends supportive of that? Did they give you shit about that? Or did they think you were crazy?
Yeah, I mean, they all give me shit now because I never shut up about real estate. But and kind of at the time too, it was the same dynamic. And well, I mean, they were all like, you're in college, right? I mean, and we're all just going out, way too many days a week, right? And for me at the time, I was like, I was serious about it, but it was because I really, really enjoyed it. It didn't feel like work to me, and I was always interested in all, like, I had like a natural inclination to figure out how to make money that was out of the norm, right? So there was it was normal for everyone around me to see me doing that, so it wasn't that weird, just because of my personality type and for the folks who knew me a long time. But they were like, you think you can go buy a piece of, like, they, just totally foreign concept for most folks in their early 20s. And I thought it was too myself until I met the guy who was who lent me the money, right? He was the one that really put it all together. And that was like, just, the idea that somebody can lend you the money to go buy real estate, and it doesn't have to be a bank, and you don't have to put 25% down. That blew my mind. That's really what allowed me to get going, was, being a little creative like that.
Love it. So, and the first one was a 3-unit, you said, right?
Yeah. Small 3-unit property.
3-unit. How did you source that deal, by the way?
Yeah, just hanging out on Craigslist. I for me, it wasn't foreign to me, because that's where I found all my good deals on cars, right? So I just left the car section, went over to the apartment section and the real estate for sale by owner section, and I just messaged every single individual who listed a property for sale by owner that was a multifamily, just rifled out tons and tons of offers. And, it took 9 months, 6-9 months or so to get one to stick. But yeah, that was my strategy back then. I'd message everybody who was posting up apartments for rent, asking if they wanted to sell. And then I would reach out to all the for sale by owners. That was back when a lot of folks were still using Craigslist to do that, so I'd have a lot of conversations.
Yeah. So dude, I love the creativity, man. I love just the sheer, I'm going to figure this shit out and get it done. Like, It's awesome. Did you use a mentorship? Like, did you have mentors? Was this hard money lender, a mentor, or private money lender? Was it hard money or private money? What'd you say?
I guess he charged me hard money terms. I called him a private money lender because it was like a guy, it was a dude lending his own money. But I was paying the 12 and 2. It wasn't cheap. He was a business guy at the end of the day. In terms of mentorship or any folks in that respect, he wasn't really a mentor because he was just a lender, right? He didn't know how to find the deals. He didn't know how to operate them. He didn't know anything about construction. He just had a few guys in his circle that went to him for some loans on some house flips, and he almost fell into it himself. So he wasn't even really a real estate guy. It's just something that he did. He was like a sales executive that invested in, small startup companies and did that as well. And, I didn't have any mentors, right? My parents weren't in real estate. It's funny. My dad's a Swedish immigrant. He started a wood chipping business. So I was exposed to business ownership, but nothing to do with real estate. He's actually, the anti-real estate investor. Like he thinks debt is evil, no matter what kind of debt it is. So like, just somebody that didn't really come from that world. And then nobody really personally, for me, it was just, I probably listened to every single episode of the Bigger Pockets podcast, like twice, as I was just, anytime I drove, I threw it on. Anytime I was playing video games, I threw it on. I go to the gym, I'd throw it on. Whatever I was doing, walking to class, I'd throw it on. Right. So for me, it was just like sheer volume of information. And I think at the time, I was never afraid of taking action. I was like, who cares? Like, I was like, if I lose my own money, I don't give a crap. Like, I'm 21, I'll just go make it back. Like for me, there was never, and you're playing with house money at that age too. I had no responsibilities. I was like, so long as I pay the lender off and so long as I don't screw up at that level, because, I was never going to lose somebody else's money, but I was like, I don't really care about my own. Like, I'll just go make it back. That was my mindset. I was never really afraid of that. So I just took a lot of action really quickly. And I think, good time in the real estate market, bought deals at the right price, did all that stuff correctly. So it all just ended up working out.
No, but dude, it didn't just end up working out. It worked out because you took a lot of action, bro. Like, that's the reality of it, man. I wish that I could say that at 21, I was listening to, well, I don't even think podcasts were a thing. I'm a little bit older than you. I don't know if podcasts were even a thing, right? But it wasn't even on my realm of possibility, So the fact that you were doing that at 21 is so impressive to me. I think it's awesome. So tell me a little bit more about the journey. So you sourced that one from Craigslist. Your first one was 3 units. And then where did you scale from there?
Yeah. So around this same time I got my real estate license, because I was like, that's an easier way to learn more about this business. And, I might as well sell some real estate while I'm looking for my own deals. So worked as an agent like throughout my senior year of college, and then full-time as an agent my first year out of school. And that was helpful because it allowed me to monetize what I was doing a little bit more. So I just started reaching out to a bunch of owners saying, hey, I'm a broker. I'll sell you, this is just me throwing crap against the wall, right? I'll sell your property, or else, maybe I'll buy your property. And I was just like trying to figure out how to make money here and there and put all the puzzle pieces together. So I was making money through commissions. And I got some referrals from the guy that I worked for, the brokerage I worked for. And then I'd buy, I think my first year I bought that 3 unit. The next year I bought 2 3 units in a duplex. The next year I bought like a 6 unit and, an 8 unit. And then I started slowly getting a little bit bigger, a little bit bigger, a little bit bigger, but it was all using a lot of private money. So it was a lot of debt, which I felt comfortable with doing at the time because 1, I was young and stupid, right? And I didn't know any better. But 2, I was buying properties at such a discount to market value that I could leverage them at 95, 100%. And my private money lenders were comfortable with that because I'd be buying them at 80% of value. So they were like, oh, 80% of, LTV, even though I'm lending them the whole purchase price. So I was able to convince folks along the way to do that. And I was basically building a portfolio without using a lot of my own cash. And in terms of, to summarize a 3-4 year period of time pretty quickly, it was just doing that until I got to like 60, 70 units that I owned. And, but then I was starting to feel the pain a little bit. I was like, I don't like doing all of this deal with my own cash because I'm moving money around, and it became a cash management issue. And if a project went over budget, like I'd have to pull some. And for me, I was like, this is starting to feel a little bit too risky for how I want to grow the business. So took a step back, sold a couple properties, sat on some money for a little bit and said, what comes next? And I knew I wanted to do bigger deals, and I knew I wanted to just stop doing deals outside of only New Hampshire. Right. And I was living in Boston at the time. So, or, still do. I'd moved to Boston at the time. So I knew that like I could continue doing deals up there, which is about an hour away. But I said, yeah, I might as well start looking at a state. I feel like it's time to start looking at deals elsewhere. So I started looking in Central Florida because I had a friend that lived in Tampa, and he said, go look in Central Florida. You can find deals there. And then I was still doing the deals up in New Hampshire. But I started to raise money on a very small scale, brought in a partner here, a couple of partners there, big investor here, a couple of big investors there on these small 10 to 30 unit deals. And then that turned into learning about syndication. And then I started to syndicate deals, again, small scale, $1 million here, $1.5 million there. And now our business has really become, like syndicating real estate deals that are in that mid-size, where we're doing deals anywhere from $4 to $10 million in size and raising the equity through syndication. So I might have given you more than what you wanted there, but I think early on that's what it was. It was just baby steps. And then I took a step back and reevaluated and said, let's go bring in some other folks to help capitalize what we're doing. So I'm just not so cash poor all the time trying to figure out how to do all this stuff, and I can grow a little bit, more predictably.
I love it, bro. It's the reason it's perfect detail because we have an education program, man. We have a bunch of students that come through, and we obviously talk about how I scaled, and I had a mentor, and I dove right into syndications and doing bigger deals. And it's like, but there is multiple ways to start and scale. Right? There's just multiple ways to start and scale. And so I think it's so important for people to hear that and understand that. It's like, dude, if one way is you're struggling to get into one, go this other way. And it's all about the journey and the overall long-term game, dude. So if you start with some 20, 30 unit properties that allow you to scale to some bigger ones, shit, it's awesome. The whole thing is the long-term scalability game that we all play within the real estate space, especially within the multifamily space. So are you sourcing and buying deals right now too?
We are. Yeah. I mean, it's harder nowadays than it has been, right? I mean, last year we bought about, I think we did a little over 200 units, and we do a higher volume of these smaller deals. So it was 200 units, but we did, I think, 13 deals to comprise that. So we did about a deal a month. This year, we're going to close on our first deal in the end of June, and that'll be the first deal we close in 23. And it's just because, I think I joke, like, if I had $1 every time I heard a broker talking about, the bid ask spread, I feel like I could just retire because I think that's where everyone's at right now. It's just the gap between buyers and sellers are big. So we've had a harder time getting deals done this year, but we are certainly getting the reps in, and we have a great deal, like a really, really compelling deal right now that we're closing that we're really excited about. And we think throughout the end of throughout the rest of the year, we'll be able to do more. I think, this first 6 months was just weird because everybody was kind of just taking a step back. But as we spend more time in the elevated interest rate environment, and the market starts to react in a more mature way to what's going on, and we've kind of stayed at this same level for a while, I think people will feel a little bit more willing to transact, won't be so afraid about it. And I think we're going to start to do some more deals towards the end of the year, but we still are now. Yeah. I mean, and we're fundamentally sourcing those deals the same way we always have. It's just taking a little bit more to get some deals under contract. We're making more offers, turning over more rocks, but the fundamentals haven't changed.
Yeah, same with us, bro. Same, man. It's there's deals out there. We're still sourcing the same way that we do, but dude, we just got to be more selective. I mean, we're usually always fairly selective. Like, it has to make sense, right? We're not trying to rush into anything. We're the same, man. How are you sourcing your deals right now? What are you doing to source your deals? When you say sourcing the deals, you're, the way that you usually do. What is that way?
Yeah, we do a lot of different stuff. We've really built our business on going direct to seller, which I think a lot of folks in multifamily just have a preconceived notion that doesn't really work. The asterisk is that our criteria is such that we can have success doing this, right? So we typically pursue 20 to 80 unit deals. On the smaller end of that range, I'll either just personally buy it, my own resources, my own capital, or we'll just do a simple JV, me and a couple of other partners. Once we start to get 40, 50 plus units in size, that's when we start entering the syndication realm. And we do that throughout New Hampshire, southern Maine, which is basically an extension of New Hampshire, and then down throughout Central Florida between Tampa and Orlando. And the reason that we focus on that deal size is because we can get in front of sellers and make offers in a much more predictable fashion, right? The challenge with sourcing deals through brokers, which, brokers transact 95% of all the deals at 100 plus units. So you're not going to have as much success going to direct to seller at that level. But, I don't think it's a predictable way to build a portfolio, at least in the stage that we're in for our business, right? And I say this is specific to our situation, to just wait for the brokers to send us those deals, because we don't see that many of them, right? We're just waiting around, waiting. So in order to more predictably build our business, to do a higher volume of deals, to get the reps, and to do, to place more capital, to grow the portfolio, we go out and get in front of folks. So I have a full-time acquisitions guy in our business. He's US based, salaried. He makes, 300 to 400 cold calls a week to owners. We mail all of our, we send direct mail bi-monthly. We do a lot of cold outreach over email. And we're very, very intentional about building relationships with deal finders in markets, whether those are residential wholesalers that might stumble across a multifamily deal. Brokers, of course, we still try and maintain good relationships with brokers. We do a lot with local service providers. We're always trying to incentivize local service providers to bring us deals. Closing attorneys, mortgage brokers, insurance brokers, GCs, PMs, all of these different folks. So we do all of this stuff, and we try to do it in a systematized fashion. So we got a big ass CRM where all of this stuff lives in, both the professional contacts and then on the personal side. We have an email, newsletter that goes out to each that's hyper local to each market that we play in. So we stay top of mind with all the folks that are doing deals. So we do a bunch of different stuff, and I'll stop there because
Yeah.
at the expense of rambling, and I'm down to go into any component of that, but that's really what we do. And that's our
No,
special sauce, I think.
bro, there's a ton of actionables that I just want to pull from that right now. Number one, that deal size that you're talking about, that is more your mom and pop owner. That is like some of the best deals you'll source right now in today's environment is direct to seller. And you're right, 100 plus units is typically from a listing broker, right? And so that deal size, this is just an actionable for all the listeners, is that deal size is a great deal size right now to source. We are doing a deal right now. One of them is, it's like 40 something units. Another one is 114, but both of those are direct to seller. And exactly what you just, for the reasons exactly what you just said, right? Both of them are actually down in Georgia. And the reason is because, man, those are the best deals to source right now. And what I see people doing, there's two types of people, right? There's those people that are, well, maybe three. There's those people that are just completely on the sidelines. There are the other people that are saying that they're going to buy deals right now, but there's no deals available. And then there's people like you who go find some damn deals any possible way they can because, dude, that's your business, man. It's like you hit one stumbling block, you go to another. And that is what it takes in a market like we're in. So many actionables from what you just pulled, dude. You're a beast. I love it. I love so much, bro, what you just said right there. It's awesome.
Yeah, no, I appreciate that. And, it's not easy, right? I think that's the challenge is that it's not easy and it requires a lot of time in order to see results, right? And I think that's oftentimes why people shy away from direct to seller, specifically in multifamily. And again, it might almost be beneficial to separate like large multifamily called $10 million plus deal size. Like that's almost its own bucket, right? It's very rare to transact direct to seller and buy a property at a steep discount from a unsophisticated owner at that size, right? Unless you're playing in like a very tertiary market or you're in, you just stumble upon a great deal. It happens. It's just not common. But in that range we're talking about, it doesn't even need to be an incredible investment in your time in terms of you cold calling or cold emailing, right? That's a time investment. You can just invest monetarily by sending direct mail 6 times a year to that list and just taking some inbound calls. You're basically trading dollars for conversations there. And when you think about the return on investment for doing a lot of this stuff, like, this is how I explain it to folks who are like, does that really work? It's expensive to do that. And there's skepticism, right? So we do this in Central Florida. We do deals in Central Florida. Central Florida is competitive. That's a competitive market. Like there's national interest in where we do deals down there. We sent an LOI out on 48 units from an owner we contacted direct to seller. Wants 85 a unit. It's probably worth 90, 97, 100, maybe a shade over 100, depending on who's appraising it as it sits. And then we get into the value and start creating value. And just a cold email, my acquisitions guys sent them, custom email to that guy's situation. And yeah, it's a time investment. But when you think about what's at stake here, which is oftentimes millions of dollars in value and equity, if you're talking about the deals at that size range, we might pay 4.5 million for a $5.25 million asset. Like, the marketing starts to pay for itself. So in that range, it helps, and I see the future of our business being, we do want to do 100 plus unit deals exclusively, but that's not the season of growth that we're in right now. Like we're still very much in the season that we need to prove ourselves to all of our investors, right? We have, 35, 40 individual investors. We want to get that number to 50, 60, 70 before we feel comfortable offering on larger deals and being able to capitalize those deals. So we do that by buying these less expensive deals, giving them great returns, building a good story, filling up our track record, doing all of these different things. We're almost defining ourselves as like, we are a market inefficiency for a passive investor. And that's what we tell. We're like, you're investing in a company that's growing and has to give up more than they need to right now. So that's the compelling opportunity for you to get involved in our deals.
Great narrative, bro.
Yeah. I mean, that's where we're at. I'm like, dude, we're not going to be in this season forever. Like we might be here for another 12, 24 months, but like we are giving more than we should be giving up. And we're only doing that because we have to, because we're early. And so in this period of time, it makes sense to do this. And I think I'll always do this type of marketing because, I would love to personally buy 30, 40 unit deals with some creative financing that we find direct to seller. And then we'll syndicate the larger ones because it does make sense to do larger deals, right? For all the cliches, it's a little easier. It takes the same amount of time, et cetera, et cetera. But, that's how we think about it right now.
It's a long-term approach, man. And I love the narrative because it's very similar to how we started, man. Like I look at some of the first deals we exited and it's like, for real, like we look back at those and we're like, my gosh, man, we gave away a shitload to our investors. And you know what? Best decision we ever made, man. Best decision we ever made, because what did that do? Now we gain this track record. Now we gain this trust with investors, and that starts to spread. And then guess what, man? Now we're doing big old deals. You know, it's like, is that so many people, they want, it's like they don't have that patience. And it's like, when I look at patience, they have a patience to stay in a job for, you know, however long to stay in a job. But they don't have this patience to just like, dude, to play the game, man, to play the scalability game. So I respect anybody who's able to play that game and just understand the game that they're playing and enjoy the process behind it, dude. I love it. Okay, give me an example of maybe a deal that you sourced off market. And using some of the same strategies you just talked about, if you don't mind.
Absolutely. Yeah. So here's one. So we did a 40 unit portfolio acquisition in Manchester, New Hampshire, which is, you know, again, the largest city in New Hampshire for those that aren't from the Northeast, an hour north of Boston. That's really where we have our whole team up there. And, you know, again, it was a cold call to a woman who inherited all of the properties through a divorce with her husband, right? So she had some distress at that level. This was a $4.2 million purchase price, $400,000 renovation budget. And we just wrapped up doing all of the renos for this. And we just had it appraised during a refi for $6 million. And that was in 1 year, right? We did all of that in a year.
You bought it for how much again?
4.2, and I forgot to mention we had a $200,000 seller credit. So realistically, we paid $4 million for it. Put about 450 or so in it, so we're all in around 4.5. And you know, I'm leaving closing costs out for the sake of conversational ease here, but we're appraised at 6, and I think it's worth 6.25 now. And that was a deal that we sourced literally direct to seller. This was back when I had a virtual assistant helping me with cold calling, which I don't do anymore because we weren't getting the results we wanted to with that, and we, you know, it wasn't a great situation to be sending a virtual caller out into the field with our brand name without intimate knowledge of the business. That's a whole nother tangent. I have somebody local to the US doing that, but our virtual cold caller connected with this woman, and we worked that deal over the course of 4, 5, 6 months. She was trying to get him ready to sell. She thought about hiring a broker. You know, she wasn't sure exactly what she should do. Maybe she should hold them. Maybe she should sell some of them, not all of them. We were just there, you know, worked her through the sales process, worked her down the funnel, stayed in touch every couple of weeks. And then we didn't compete with anybody else for that deal. There were no other buyers that we were competing with. And we've done many deals in similar size that are of similar style, right? Where we either contact through a piece of mail, we get a call back, or they pick up the phone during a cold call. And I think of direct to seller in multifamily as it works the top of the funnel. It's very rare that you're going to, somebody's going to call you back after they receive a piece of your mail or reply to your cold email outbound and say, yeah, I'm ready to go. Let's do it. Like, you know, you got to get on the phone. You got to have a conversation. You got to build some level of a relationship. You got to build trust with them, because, you know, most multifamily owners at that level still have some level of sophistication, and they're not going to sell it to someone that they don't think is credible or can close. You know, you got to handle all those objections, bring some value over time. And where people get lost is like, you got to work them down the sales process, right? And you got to get them from the top of the funnel down to the bottom. And that takes a lot of time. And that's just one example, right? So I'll stop there because I'm rambling, but I think that's one deal in which we put that to work. Yeah.
Okay. So walk me through this process, man, because you had mentioned a couple questions we can dive into. One, you said that there's this stigma that direct to seller doesn't work in multifamily. And I agree, bro. I've been in the space since 2014 and I've done multiple direct to seller, but it's so funny because there is that stigma. So the question with that is why, that I know people have, dude. So I'm going to let you hone in on it. Why would a seller want to sell directly to you instead of having a broker go and shop it out? Let's just start there, dude. Why would a seller want to do that?
I'll be quick too. I'll bullet point it. So there's numerous reasons. I'll just kind of list some of them off. Partnership distress. A lot of multifamily owners own their property with a partner, a business partner, JV partner, what have you. And maybe that partnership distress is so severe that they can't go through a traditional marketing process, and maybe they need to resolve that situation a little bit more quickly. So partnership distress is one. And then you get the traditional death, divorce, kind of the traditional lifestyle motivation that causes an owner to sell. Maybe somebody inherits it in this situation through a divorce, or, you know, a kid inherits a portfolio of properties from his mom or dad. They look to sell. You oftentimes have mom and pop owners that self-manage at this size that really, really love their tenants, and they don't want to subject their tenants to an intrusive marketing process. You think about a broker, right? They got to go walk through all the interested buyers, and they're constantly bugging the tenants. Hey, we're going to come back. We're coming through your unit at noon on Friday. We're coming through again on Saturday at 9. We're coming through on Monday at 5. Sounds stupid to a lot of people. Like, why would you? A lot of owners, that actually really matters, especially when you start getting down into the smaller end of that range. 15 to 30, 40 units where they might have one-to-one relationships with all of their tenants. That's another reason. Oftentimes, and I think that this is becoming less common as folks are aging out of this business, but I can't tell you how many portfolios of properties and large properties we've bought from owners that are just allergic to paying brokers. Like they feel so bad to give a percentage of it to a broker, which to smart folks is so short-sighted, because a broker is going to get your top dollar and they're going to pay for themselves. But a lot of owners, they just can't. They love the idea of saving that money, even if it means they're selling at a discount. There are a lot of owners that just don't feel like going through the hassle of a marketing process. It takes a while to sell a property when you engage a broker, right? They gotta put together the BOV, then you gotta talk to them about the price. Then they have to get all the financials from you. They got to get your T12, your rent roll. They got to go walk the property. They got to take pictures. Then they got to load it up and they got to send it out to their email list. And they got to work through multiple weeks of showings, and you got to field offers. It's like a 30, 60-day process before you even, sign a contract, oftentimes when you're selling an asset, if not more. And some owners are like, cool, you're close to where I want to be. That's fine. Like, save me all that hassle, right? Save me all that time. And then, we're just really easy to work with. In our markets, we'll send you a P&S. We don't even do an LOI. We'll just go straight to a contract in our markets. We just go right to the contract. Like, here's the contract. Take a look at it. You gave us a rent roll. That's enough. We know what we're going to operate it at, because we own plenty of units in these specific markets. Like, whatever your expenses are, they're just not going to be our expenses. So give us a rent roll and we can get you an offer. And that's as easy as it's got to be. And we make it so simple. So there's any number of reasons that, to a lot of folks that are a little bit more sophisticated, they don't get it. But even myself, I'll consider myself a sophisticated investor, someone that's got their eye on the ball. I'll receive a piece of direct mail and I'm like, you know what? I hadn't really thought about selling that property, but we just had to replace, 5 water heaters, and we've always had a tenant issue there. And I'll call people up and I'll just have a conversation. It doesn't really, typically result in me selling it. But I think if I was at a little bit more pain, even though I know the best route as a broker, if they got close enough, I'd probably entertain doing a deal off market, right? And so it happens to everybody, right? Another thing, if there's an owner who's going through some level of distress from a deal just went bad, like they botched a deal, maybe they used the wrong debt, or they spent way too much money on the renovations. A lot of egos in this business, right? A lot of people like to quietly sell something without having to broadly market their bad deal through a broker to all the people that are local in a marketplace. We bought some deals that went sideways, and the seller liked the idea of getting out of it, without having to show more people their mistake than what was required. So that's, nuance, but there's all kinds of different reasons is the fundamental point.
Dude, y'all who are listening to this right now just got so much. Bro, Axel, you just dumped so much gold, because that last one, by the way, I hadn't even thought about. That is so damn true, man. This pride of they don't want other people to know, and so they want to go, backdoor. I hadn't even thought of that, dude. It's so true. But here's what's so powerful about, I just want to spell this out just in case you didn't catch it. What Axel just laid out for you are the pain points from all these sellers. It's pain points of sellers. And what you need to understand is, if you're going to, like he said, take them down a funnel, you have to understand what their pain point is, which is discovering the pain point, switching places, right? Discovering the pain point, asking questions to see where that need is. And then, dude, you got to locate the pain, man. And he just gave you the secret sauce to knowing what the top pain points are for these sellers, which means you can ask questions around these line items to help you discover it. And then you can start solving that thing together, dude. Embracing, any objections that you may have, and then just going in and solving it together to provide solutions for him. Like, he literally just wrote, if you didn't catch it, go back, rewind, replay, take notes, because you talk to those points, and dude, you'll be able to, once again, like you said, take somebody down a sales funnel to get a seller motivated and interested in selling their property, bro. And as far as direct, getting a direct mail campaign or getting some sort of, bro, it's the same. I've had that same. I've actually sold directly to buyers because of the same thing. Right? I've got their mail piece, or I've got somebody reaches out, gets my phone number, who knows where, and then I have this conversation. It's like, well, shit. Actually, maybe,
Sometimes
maybe?
the timing is just right. Even if regardless of how sophisticated you are as an investor, sometimes somebody hits you and the timing is just perfect. Regardless, and last thing, because and I don't want to go back to it too much, but people underestimate other people's, how they think about the business, right? So we bought a lot of properties from owners who thought they were getting above market for a price, but they were 2 years behind in what was going on in that market, So they think they're calling every one of their buddies, dude, I just sold that property for that. And we're like, dude, we just bought it for that. Both of us think we won. And so, and that happens a lot in markets that are growing quickly, where the markets start to get away from a lot of the legacy owners there, in New Hampshire, right? Incredible appreciation over the last few years. And it used to be considered a dumpy, area to buy. And now it's, the greater Boston area, right? So we had a lot of owners that were selling at 80, 90,000 a unit, and they bought it 50, 60. And they're like, dude, I can't believe anyone would pay 80, 90. And we know they're worth 110. So there's just a misalignment of information. So you never know, right? You never know until you actually have those conversations.
Dude, that's another absolute golden nugget, man, because we bought a bunch of, I call him the old man. We bought a bunch of properties in the Charlotte market, direct from seller as well. And we were the only buyer this dude had ever had. He had a bunch of properties, dude. We bought a 40-unit property, then a 315, then a 415, then a 70. It's like, dude, he was just offloading his deals. And the thing is, man, all those deals, like we just said, I mean, he had developed them, held on to them. So he's cash flow positive. Like he's just chilling.
Yeah.
And so we come in and we're like, oh my gosh, we're getting a screaming deal. And same thing, dude, on his side, he's like, oh my God, I'm just freaking cash. I mean, these guys are nuts, And then we freaking drive up the values on those things. It's powerful, man. I just believe one of the critical components, raising capital, dealing with brokers, dealing with sellers, dude, dealing with human beings, is removing what your perspective is just for a second. You have to remove it. And just try to see it from their perspective. And it's very hard for you to try to see something from anyone's perspective if you already have a preconceived notion, and if you don't ask questions, direct questions to those individuals to discover. You have to have a discovery phase to be able to do that, man, which I can just tell from the conversation is something that you're very good at. You don't build the portfolio that you have directly off market, getting off market deals without being able to discover pain points and be able to create solutions around it. So I love it, bro.
100%.
Okay, man. As we wrap this up here, any advice? Like, you've been in it since, I think you said it's 2016, correct?
Yeah, exactly.
2016. Now knowing what you know now, you have 400 something units. I can't remember how much,
shit over 400. Assets, yeah.
Okay. What advice would you give to a new investor diving into the market right now, about to scale and grow? Bro, what advice would you give? What learning lessons have you had, right?
Yeah, I mean, so I'll share a learning lesson, then I'll share advice, because I think they're a little different, and folks will probably get something valuable out of both. I have gotten hosed in this business on deals where I either bit off more than I could chew, or I just work with the wrong people. And if a deal has gone sideways, I can always kind of trace it back to one of those two, realistically speaking. I did a couple of deals early on that were, I went from doing these light apartment turns to doing like massive heavy value adds. And the first one I did, I got absolutely drilled on it because I was not in a position to manage a construction budget of that size. I had never done a deal like that before. I had the wrong contractors involved in that deal. Didn't have guidance in terms of how to actually do a deal like that. And I should have just partnered with someone that had the experience doing that, leveraged their team, their experience, et cetera. And that's a combination of both. Bit off more than I could chew in terms of the size of the deal. And I had the wrong people involved. And there have been a couple multifamily deals where maybe we haven't lost money, but they just haven't gone as well as they could have. And usually it's because of that thing. We're changing a market, or we're doing a different type of deal. And now when we do that, right, we normally do value add C-class deals. If we were to look at an A-class deal in a market we hadn't done a deal in, I could be as confident as all hell in my underwriting, but I would still bring somebody in that has more experience doing that to at least be a part of the deal, to make sure that I'm not making any mistakes I don't have to make, right? So I think those are the mistakes I've made along the way. In terms of, piece of advice for folks that are getting in the business now, we've spent a lot of the show talking about it, but I truly do believe that the only skill that you should be focusing on truly developing when you're getting started in this business is learning how to build a pipeline of deals, not how to find a good deal. You don't want to find one deal, right? I think that's the misconception. We don't want to go out there and find that one deal. We need to learn how to build a pipeline of deals, and we need to excel at the activities that support that goal, right? Which drop the deals in the top of the funnel, because that's where all the compounding happens. That's where you put yourself in a position to underwrite more deals. So you get better at underwriting faster. You look at more deals in a given marketplace. So you know more about that market. You understand more about that market. You know where which areas can achieve which rents. You start to get a sense of what type of product is typically sold. You start to get a sense of who the active brokers are, who the PMs are. A lot of the stuff that is more like, repetition oriented in terms of getting better at that skill happens when you just pour more deals into the top of the funnel. And it's really hard to learn this business or learn a market if you're just waiting on a broker once a month to send you a deal, and you're just kind of clicking on the link that they send out to their whole list, and you do some underwriting. Like, it just takes you much longer to get better at all of the other things. And then the best part is, if you do that, you just buy better deals anyway. So not only do you learn everything much faster, you just buy better deals, and you control your own destiny. You take your destiny out of somebody else's hands. And the easiest way to scale in this business, to buy a number of properties in a short period of time, is to buy good deals, because you're utilizing less of your cash. It's easier to raise money. You can deliver your investor capital back, your investors' capital back faster, so they can give it back to you faster. And if you're doing deals with your own money, you can get it out more quickly. People like to say, all right, get great at raising money. And I do think that is an incredibly valuable skill set. It's as important as finding good deals. I just think that comes later, because how are you going to go out there and raise money if you don't have a track record whatsoever, and you don't know how to identify a good deal or how to operate a good deal, and you don't even know how to, if you don't have a good deal, it's going to be incredibly hard to raise money to begin with, right? So that's what comes first. So I would spend a lot of time on getting educated on how to do that, because the rest of everything else just starts to take care of itself, outside of the raising money piece, which again, I think comes later.
It's funny, dude. People ask me this all the time. My students ask me this all the time. What should I do first, source deals or source money? My answer is different though, bro. My answer is both. It's like both. If you can do one or two of those things, then you'll have opportunity to participate. But the key is this, man. As you're sourcing deals, like, I look at raising money as a simple process of, dude, telling people what the fuck you're doing. Yeah. Tell them what you're doing. Like, if you start talking about what you're doing and talking about the deals you're underwriting, talking about the deals that you passed up on, like, you're just talking about it, dude. You're at a party, you're talking about deals you're underwriting. I know that sounds boring as shit, but you'll see people perk up. Those are the people that are interested, It's like just talking about it. I very rarely will just go, all right, today I'm going to raise money. Bro, I just talk about what I do all the freaking time. All the time. So,
yeah, because if you're doing the deal stuff, now you have stuff to talk about, right? I think it's hard to have content to talk about if you aren't doing all of the other stuff, because what you're talking about is theoretical. And I think that it gets a lot easier to raise money. And I'm guessing you would agree with this. Like, we can talk the theoretical stuff all day long. This is what is so great about investing in real estate. But if you don't have, if you're not documenting the journey, if you're not talking about, we made this offer, we just put this deal under contract, this is a deal that we own, and this is what we did in the kitchen and the bathrooms to push the rents. This is, we underwrote 7 deals this week. We made 7 LOIs, and we're not even close. This is what we're seeing in this market. These are the challenges we're facing. All of that stuff is much more tangible and believable to a prospective investor versus all of the hypothetical stuff. That's where we've had success in raising money, is not even being like, this is why you should invest in real estate. It's like, this is just what we do. Like, go look at it. Go look at all the stuff we do. And then, because there's no subjective nature to that. It's just factual. So I think it makes it a lot easier.
That actionable is super good, man, because I believe I'm just going to hone in on it, because I believe the most beneficial conversations that you'll have are not just talking about features and benefits with investors. That's where most people go. They talk about features, benefits, right? Once again, the theoretical. But if you're going in and you're telling the story of, dude, people love stories, man. And you're telling the story of, that's what builds credibility. That's what builds trust. That's what, and you said documenting your journey, bro. That's what it is. I love it, man. That's a great actionable for anybody listening to this to take, for sure. So, dude, you're a beast, man. Wealth of knowledge, man. You just wrap stuff off. I'm so glad we're able to connect. Anybody listening, I know, pulled tons of freaking value from this thing. So how do they connect with you, man? Give me a little bit. How do they connect with you? I know that you have. I also want to plug this for you too, because you had said something along the lines of you have some sort of a course that you have for sourcing off-market deals, something along those lines. Let's talk about both those things.
Sure. So, the course off-market multifamily deals in 6 weeks or less. It's something that we put together internally as a training program. Like I started developing it to train our internal acquisitions folks over the years. And then I was like, hey, this content's pretty valuable. And I've been asked over the years by so many folks like, hey, do you do like mentorship or coaching? And I don't do that. It's not really my core thing, but I put together this course that really just shares our whole playbook with folks. We'll make a couple bucks on it. I'm not going to pretend like there's not money in it for us, but really my objective is to show people how to do it so that we can partner on deals. Right. And over the years, that's really how we've started to scale our businesses. Young guy in our market calls us up and says, hey, I want to find, how do you find deals? Tell me how you find deals. And I say, here's my playbook, man. Go out there and do it. When you need someone to help you fund it and operate it, we're here. Come and chat. Let's go do it. Right. So, I wanted to do that at scale. So I packaged it up in a pretty, neatly packaged course. And that's what we're selling. And that's multifamilywealtheducation.com/off-market is the link to that. And then in terms
I'll drop it in the description section too, so everybody gets it.
Awesome. Appreciate that. Yeah. And then outside of that, feel free to shoot me an email. Always love talking about real estate. Axel, AXEL @alignedrep.com. Host a podcast myself, Multifamily Wealth Podcast, a couple episodes a week. It's all multifamily, very specific to multifamily. And then my Instagram is @multifamilywealth. I'm pretty active on there as well.
Okay. We'll put all those links in the description area so you can connect with. And bro, I'm just going to hone in on one thing. We provide education. We provide courses. Like we have our investment company, but we have a whole education branch that we have. And what's crazy is what you just said is you said that you do that. Sure, you're going to make some money, but you do that because you want to partner. And bro, it took me like 6.5 years to acquire about 1,500 units, and which is still awesome. But then starting an education business where I believe in the value creation leads to wealth creation. And it was the same, bro. I'm so passionate about it. Like, I know it's cliche, but it's changed the trajectory of my life. It just has. Yeah. And I'm very grateful for it. And so I started talking, teaching, helping, and we developed these training courses. Same thing, right? Things that we build internally, now we train externally. And bro, we now have north of 4,000 units, and it's because of doing exactly what you just said. Providing value. So an actionable, first off, is you should go take a peek at his course and pick up his course. And then second, go put yourself in a position to be valuable enough to create a course on your own, man. But that happens through dedication, man. Yeah, that's it.
Absolutely. Axel. This is great, man. I appreciate the invite. I was just going to say, I think, there's the end game for me is like, we create a platform in which we can help other people learn how, and just as you said, right? I phrase it differently, but like, finding deals is the only reason in which we were able to scale. Like that is the skill set that differentiates someone that buys one property a year and, retires in 15 years between someone who buys a ton of real estate in 3, 4, 5 years and blows their life up. Like that, I truly believe that's the skill that is the separator. So, and that's my whole thesis on it is like, when you're just getting going, you find all the deals, you got the most important skill set. Somebody plugs in the money, somebody plugs in the operations, you do a couple deals with some other folks, and then you got your own platform and you're off to the real races. Right. So I think, I identify with what you said there quite a bit.
Love it. Axel, appreciate you, man. Appreciate your dedication and time that you've spent in the market, growing the portfolio that you have, and then also your willingness to share, bro. Appreciate having you on for sure. Once again, y'all, if you don't already subscribe to his podcast, go subscribe. Obviously, more golden nuggets that this dude will spit out, and then go check out his course for sure. Axel, appreciate you, bro. Thanks so much. Thanks, man. I appreciate it. Hey, y'all out there, go once again, subscribe, follow, all those kind of things, and make sure you live always with aloha. Peace.